In this episode, we are going to look at the application of the lower of cost or market rule. Recall that there are three primary issues when we are accounting for inventory. We've looked at the first two. The last item that we need to look at is the application of the generally accepted accounting principles rule of the lower of cost or market. GAAP requires that inventory be reported on the balance sheet at the lower of its original cost or the market value at the end of each accounting period. This is a conservatism constraint that GAAP puts on to the reporting of assets. Market is defined as the current replacement cost, not the selling price. This is consistent with being conservative. GAAP indicates that this rule can be applied to a company's inventory in three different ways. The rule can be applied separately to each individual item in inventory, or it can be applied to major categories of items, or it can be applied to the inventory as a whole. It's pretty simple to apply this rule. Looking at this following example, a retailer reports these items in their inventory. They have two categories of inventory, cycles and off-roads. And within each of those categories, they have two different types of inventory items. So first, when we are looking at what inventory is on hand, we can see the number of units of each inventory item, the cost or what the company had paid for each of those units, and what the current replacement cost is, or what the current market value is of the inventory. So by extending these out, 20 units had been purchased at a cost of $8,000 each. Total cost of the Roadster inventory item, $160,000. The current replacement cost, or the current market value, is $7,000. 20 units at a current replacement cost of $7,000 each. The total market value currently is $140,000. So we're extending this out to get the total cost and the total market for each inventory item, and then adding them up to get the total for each category, and then to get the total for the inventory taken as a whole. Now, applying this rule, we are going to first look at applying it by each inventory item. If we look at the Roadster, compare the total cost to the current total market. We pick up whichever one is lower. The market is lower, so that is the amount that we are going to report for Roadsters. Sprints, the cost is lower than the market, so the cost will be reported. For Trax 4, cost is lower, so cost will be reported. And Blazer, the market is lower, so the market amount will be reported. If we add up the lower of the cost or market as applied to individual inventory items, the total amount that generally accepted accounting principles indicate we should be reporting for the value of our inventory on the balance sheet at the end of the period is $265. If we apply that rule to the categories, looking at the category of cycles, the market value is lower, so that will be the amount reported for these cycles. Looking at the off-roads, the cost is lower, so that will be the amount reported. So the amount reported by applying this rule to categories will be $200 plus $85, or $285,000 inventory. If we were to apply the lower of cost or market rule to the inventory taken as a whole, total cost of inventory $295, total current market or current replacement value $287. The $287 is lower, so we would report the $287 using that whole category or the inventory taken as a whole. There is a journal entry that is required in order to make this happen, which is beyond the scope of this level of accounting. But at this point, we just need to know that this rule is applied at the end of every accounting period. This ensures that the amount reported for inventory on the balance sheet is not overstated.